Way out west, it's unfortunate that dividend payouts are super secret sauce. They are to an extent. So if you own a policy, you can request from the company how your dividend is being paid out. So if you own a policy from each of those companies, you could probably ask for it. I have seen guardians for one particular client because they asked for the formula, for their formula. They were able to provide that for that person. They don't provide the formula for everybody because it changes. Like, the formulas are secret as far as how they decide to split it up between base premiums, paid up additions, term insurance, annual renewable term insurance, health, age, products, how many years you have left on your policy, because they're using their dividends in order to make sure that the premiums that you're paying are going to equal the death benefit at the end of the contract, when that contract matures. That's the number one goal of how they distribute their dividends. So if you have a base premium of $3,000 and your death benefit, your whole life death benefit, this is the base premium, your whole life death benefit is $200,000. They're going to give you enough dividends throughout your lifespan that you're paying this contract, so that $3,000 a year will eventually equal the value of that $200,000 death benefit. And so they're going to adjust the dividend payouts to make sure that stays on track. That might mean if for some reason something falls behind, later on they're going to give more dividends to that person so that it gets back on track. Like, they're going to allocate more of that dividend payment to that person. So it's my understanding there could be a wide range of differences in how much dividend goes out to each person. Kind of crazy, but yeah, that's why it's a super secret sauce. CDG says, it seems the accelerated underwriting is typically offered for qualified individuals when applying for IUL policies. Is accelerated underwriting offered very often for whole life policies? Yeah, everybody has an accelerated underwriting program. And for the most part, they have their criteria that you've got to meet. Most of the accelerated underwriting programs I'm aware of, that criteria involves a death benefit of $1 million or less. If you're asking for less than $1 million, you can apply for the accelerated underwriting. If there's no underlying health issues, you can qualify for the accelerated underwriting. That means no medical exam, right? Accelerated underwriting is just no medical exam. They may still order an attending physician statement. They may not. It's really accelerated if they don't. Penn Mutual is supposed to have a really good accelerated underwriting program. Like, they make decisions very quickly sometimes in as little as 2 days. There are some carriers out there that say they'll make instant decisions. You typically pay more for those. You typically pay more if there's less or lower or no underwriting involved. Not underwriting, if there's no medical exams involved or no medical underwriting. They're always going to try and check your prescription records and things like that. But the more that they limit what happens, that's why it is accelerated. Because they're doing less underwriting on those policies. So there's usually a little higher cost. So yeah, I mean, there is accelerated underwriting for whole life policies for sure.
Hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.